Hello, this is Robert. I'm a tax attorney here at Tax Resolution Professionals, and we're going to be going over the differences between IRS and FTB Offer In Compromise, and why sometimes IRS gets settled and not the California Franchise Tax Board. And this is specifically dealing with settlements that are based on financial data. So the basic analysis between the two seems the same on the surface. You look at the forms, they're asking pretty much mostly the same questions. Here are the similar conditions both types of offer and compromises need for acceptance. Income exceeds expenses, or not much income is left over. At the end of the month, you really have nothing or very little, close to nothing. Unless it's a really huge balance, then you can have some money left over, but you're going to end up with an offer that's going to be a higher amount. No assets that are worth more than the tax debt. You have more assets than the tax debt. Most of the time, you're not getting a settlement. They're going to say, sell it and pay us. There are rare exceptions where that doesn't apply. Well, it technically legally applies, but you can get around it. But for the most part, that's how it goes. Taxpayer is not in a position to pay off the debt in any way. That's pretty much the first two. That's what they're essentially asking. There's really just no way for them to get it from you. And it looks like it's going to be more of a headache for them to get it from you. So if they think, oh, we're going to have to go through so much paperwork, so much stuff to even try to get it from this guy, and it's just going to drag on, and his numbers really don't make sense, we can't collect anyway, that's a reason for them to try to accept it. Did not make a ton of money in the past few years in self-employment income. So last year you made 300 grand self-employment income. This year you made 30 grand. Well, they know your fortunes might change. They're probably not going to accept a settlement. IRS and FTB both accept each other's payment plans as valid expenses for calculating collectability. So in some cases, you have an IRS debt and you have an FTB debt. FTB debt doesn't look like it's going to get settled. Doesn't seem like it's very good odds. We'll put it in a payment plan. That payment plan expense is now calculated when you submit the IRS settlement, which makes the income versus expenses a lower figure at the end. So here's the differences. California discriminates based on age. When you're younger, they're less likely to accept it. The IRS generally has 10 years to collect on a debt. The FTB has 20 years to collect on the debt. And we'll have a link below to IRS and state CSED dates. Check that out if you're confused about how that works. There are things that can extend those time periods. The IRS uses standardized financial figures for much of the calculations, while California may accept some slightly higher expenses than the IRS. So the IRS uses what's called collection financial standards. If you Google it, you can look at it. It's based in the county. Some of it's based on national data. But California, they'll usually give you a little bit higher expenses on some things because they know living in California is more expensive. Even though some of the IRS numbers are based on county, California is still a little more generous when it comes to accepting some expenses. Reasonable is more what California is looking for. Often the California balance is very small compared to the IRS balance. So sometimes someone owes the IRS $100,000 and they owe California like $10,000. And there's really not a good chance of settling the $10,000 for whatever reason, but there's a decent chance of settling the $100,000. So in cases like that, it's very likely you're going to be settling one and not the other. At the end of a tax case, it's not uncommon to see an IRS offer accepted and an FTB offer denied. The IRS is simply more likely to accept a tax settlement than the FTB. As tax attorneys, we should be evaluating whether or not an FTB offer is worth submitting at all. A lot of firms will just submit it. Sometimes it's not worth the fee. Sometimes, it's just not a good shot. And if it's not a good shot, we shouldn't be wasting your time submitting it. I'm not sure what your options are. Give us a call. You can reach us at 888-515-4TAX. That's 888-515-4829. Or go to our contact page below. If you have a small balance and you're resolving yourself, just check out our free comprehensive tax help guide. It's at trp.tax/tax help. Again, that's trp.tax/tax help. We'll have a link to that in the bottom. And if you can't afford help, just do it yourself. And the key is, another thing I should just mention with these cases, a lot of people in offer and compromise, they think they want to wait till they get a better job, then wait till they make more money, or they have some cash saved up. And the reality is, you want to submit it while you're broke. That's when you get the best result. Anyway, thanks for watching. This is Robert at Tax Resolution Professionals, and have a great week.